Welcome to the Capital News. I am your host, Alex Corritis. Today is Tuesday, April 28th, 2020. Thank you so much for joining me. The title of today's podcast is More. Just like yesterday, kind of, I guess. Unlimited stimulus. Federal Reserve will conclude their FOMC meeting tomorrow. They will announce, obviously, their decision. We've discussed this. It's unlikely that they're going to announce negative interest rates on a nominal basis. It could happen. I think in time it probably will end up happening at some point. I take no pleasure in saying that, but, it's beyond what I think or believe is the right thing. I mean, I'm not the man at the helm here. If I was, I'd allow free markets to do their thing. We'd be deleveraging, and we'd solve this problem a lot more quickly than what we're going to do by enacting all of these fraudulent and flawed economic policies. But that's what the government does. That's what the Federal Reserve is going to do, as well as other central banks the world over. So you're just going to have to buckle up and take it. It wouldn't have been easy going the free market route either, but I do believe it would have been more efficient, more effective, and a lot cleaner. Now, with the federal government getting their fat, greasy little fingers in everything like they always do, and now really to the nth degree with no oversight, complete trampling of the Constitution, they are basically sowing the seeds of a depression, which is exactly what they did in late 1920s, early 1930s, which would have been a severe recession. The government turned it into the Great Depression. We have learned nothing. Our leaders don't pay attention, or if they do, they don't care. Either one of those is unacceptable as far as I'm concerned, because we're the ones paying for it. They're going to continue to get their fat cat salaries. They're going to continue to get their outstanding benefits. And I'm going to take the time to read another brief article, this one out of CBS, that is highlighting the real strains that Americans are feeling right now and are, unfortunately, I believe, going to continue to feel, and probably even to a worse degree in the not-too-distant future. Market performance, the markets were relatively flat today. Big earnings this week, the Federal Reserve meeting, obviously GDP, big data week coming out. I'm not going to stay up to date on all of these earnings and announce them because I think most of them are a joke. I think a lot of it's a joke because the market's completely disjointed, disbanded from everything. So what difference does it make? If it's a good thing, then the markets will rally. If it's bad, they'll probably rally again as well because it'll justify further actions from the Federal Reserve and or the federal government. And until and when, of course, that day comes and there's another reckoning, which I do believe will happen. But nonetheless, overnight, futures markets, we have the Dow, the S&P, and the NASDAQ all up. The Dow is up about 1%, S&P up 1.5%, and the NASDAQ 100 is up 2%, probably on the back of some earnings reports, I imagine, out from the tech sector. Again, I'm not paying attention, but I would assume that that's what that's on the back of. Japanese markets are relatively flat at the time of this podcast. The European markets were all up in the green today, in the major averages anyway. Up anywhere ranging from about 1 to 2%, depending on the index. And the land down under in Australia is also trading live right now, and they were up about 0.8%. Oil yesterday when we were talking was getting a beating, was getting a shellacking. It has since rebounded and is now trading overnight up about 13%. And is now trading WTI, that is up at $13.90 per barrel. Again, it was about $11.10 yesterday. It is now at $13.90 a barrel. Brent, the international metric, is trading at $21 a barrel, also slightly up. Natural gas is also up in overnight trading here. $1.96 per million British thermal units, so quite the run-up in natural gas. Gold and silver are also slightly up at the time of this podcast. Gold is $1,710 an ounce. Silver, $15.19 an ounce. Uncle Sam's 10-year Treasury note is at 0.62%. So that's some of your market performance for the day and in the futures markets right now, or the live trading, depending on where we are in the world. Australian first quarter inflation rate is the highest in 5.5 years. Canary in the coal mine. I should say. What's going on here? Is it going to be inflation? Are we setting the stage for inflation? What is the Reserve Bank of Australia to do? Is inflation going to get out of control? Are they going to have to increase interest rates? Are they going to have to stop, perhaps, or start at least jawboning? No, we're not going to do quantitative easing anymore. We're not going to print any more money. Are they going to say, oh, we're going to tolerate the inflation because it's good for us? Takes me to another point. Maybe I've said it on a previous podcast before. I don't know. I hope that I have. But if not, I'm going to do it now. There are only a couple institutions on the face of this earth that want inflation. Can you take a guess? Central banks and governments. Central banks and governments are the only institutions that want inflation. Okay? Nobody else wants it. And what I really mean is the effects of inflation, right? Higher prices. How many of you go to the grocery store looking to spend as much money as possible? Or do you go looking for things that are on sale? Do you take the time to go through coupons to see the things that you commonly buy and use the coupon so you get a lower price, not a higher price? When you go to a car dealership to buy a car or to lease a car, do you tell the dealer, you know what? Add an extra $5,000 to the sticker price. I'm feeling generous today. Nobody does that. Who goes in to buy a house and say, yeah, you know what? Knock it up 10%. Happy to do it. Nobody. Who goes shopping for health insurance saying, you know what, let's just spend as much money as humanly possible. I want the highest premiums, the highest deductibles, highest co-pays, everything. Nobody. Nobody wants that. Governments want it. Central banks want it. They're the only ones because it's theft. And because it allows them to hide underneath these shifty and shady policies that they enact. It's politically convenient for them to do so because they don't have to raise your taxes. Because there's no way on God's green earth that all of these programs that they promise to everybody can be paid for. And they can't be. And we are witnessing that. We always witness this, especially in recessions. Now it's the granddaddy of all of them. And what have we learned? Apparently not a damn thing, because now we're going to be hyperinflating. Because inflation is a tax. It's a hidden tax. But it's not directly coming out of your paycheck. It's not a line item. It's not your withholding. It's not your state. It's not your payroll, Medicare, Social Security, that type of stuff. You don't actually see it on your pay stub. But when you go shopping, you're going to end up seeing it. And everybody knows it. Politicians know it, central bankers know it, and not a one of them is going to come out and tell you that that's the case. Because it benefits them. Because it allows them to make all of these grandiose policies and promises. Oh yeah, we'll pay for everything. You don't got to worry about a thing. We're going to pay for it. Isn't it the right and proper rule of government to offer you X, Y, Z, A, B, C, 1, 2, 3? Of course it is. Well, how's it going to be paid for? Don't worry about it. We'll cut a little thing over here. We'll add some over there. And everything will balance out. It doesn't work that way. If it did, we wouldn't have $24.5 trillion national debt. We wouldn't have $100 trillion in unfunded liabilities. We wouldn't have a national deficit right now that is over $2 trillion. And by the time fiscal year 2020 is finished, come September, we're going to be north of $4 trillion. Even if you took $4 trillion and said that was it, and you said, for the sake of argument, that GDP was $20 trillion, that's a fifth. That's 20% of GDP right there in your deficit. Do you think that's sustainable? The answer is no. And what politician now is going to come out and say, well, we got to pay for this. We're going to have to raise your taxes. Everybody is broke. What are you going to tax? 26.5 million Americans, more than that, are out of work. Who are you going to tax? See this, folks? So their only recourse, well, it isn't their only recourse, but because they're slimy scum, that's what they're going to do. They're going to say, well, we'll just inflate it away. We'll just hyper-inflate it away. Because when you're talking trillions of dollars, not just on a national debt level, but on a deficit level, that's your only recourse. Right? That they're going to do. They're not going to raise our taxes, at least not now. Your kids, your grandkids, your great-grandkids are really going to be paying for it. And we're going to pay for it too, don't worry. It's coming. Not going to do that. Are you going to default? Well, we've talked about that. Probably not. Probably not. At least not outright. I mean, hyperinflation is basically a default, but at least you're getting some currency in your hand. So that's what it is. So just understand. Anybody who says we need inflation is an idiot. Understand that, okay? Because when you go shopping, you are not looking for higher prices. Even producers aren't looking for higher prices, because those producers also have suppliers, also have vendors, and they get on the phone and they say, hey, look, they're not going to call them up, their suppliers, and say, hey, yeah, tack on another 15, 20% to my costs, because I would love to have my profit margins squeezed, or I would love to pass on that extra cost to my consumers, which is just going to make them go elsewhere to look for lower prices. Completely backwards, completely upside down, but that is the system that we have adopted. That is the society we think is optimal. I have no idea why. Lack of education, I guess. But this is what they continue to tout. Inflation, inflation, inflation. So it'll be interesting to see what the Australians do with this. It'll be interesting to see what we do with it when it starts picking up. Because remember, the Federal Reserve has already told us they're perfectly fine with inflation going up above 2%. If it goes up 3, 4%, it's perfectly fine because it's symmetric around where it has been over the past years, and it's been a little bit low. So we tolerated lower inflation for a while. Now we can tolerate higher inflation for a while. Yeah. Again, the only idiots that want it are central banks and federal governments. Doesn't benefit the people. It screws the people. We've given many, many examples of how it does almost on a daily basis here. But I hope you just understand that, because that is a very, very important point. Because when you watch the financial mainstream media, when you listen to central bankers, that's what they're all talking about. Inflation, inflation, inflation. That's what we want. There's got to be some inflation in the economy to get the economy going. That's nonsense. That's nonsense. Lower prices give everybody a higher standard of living. Not a lower standard of living. A higher standard of living. Because the dollars in your pocket go further. That's what the free market system would do. Producers, suppliers are looking to give you a better product at a better cost. That better cost, that better price is lower price. That's how it works. But now we have massive consolidation. We have corporations that are too big to fail. We have sectors now that are too big to fail. Entire sectors that are too big to fail. The energy sector is going to get bailed out. The airline industry is getting bailed out. Hospitality industry is likely to get on board somewhere down the line. One after the next. States are lining up. They've messed up their finances for decades. For decades. Now all of a sudden, they feel justified in coming to the federal government asking them for money. This is what I'm saying, folks. No bailouts. Because when do you draw the line? I guess you come down to you either give them to everybody or you give them to no one. And the answer is no one. You allow for the market to delever. You allow for corporations, no matter their size, small, mid, large, mega, if necessary, to file bankruptcy, to go through those procedures. Again, in the case of an airline, those planes don't disappear. Pilots, flight attendants, they don't disappear. Their skill set doesn't magically vanish either. They still have their skill sets. They still have their training. What this does is it allows for a cleaner balance sheet to take root. What this allows is for the board members and for the executive suite to get their asses handed to them, get kicked out the door. That's the natural process. They messed it up. So now you allow new entrepreneurs in there, new managers in there to do a better job. That's what's supposed to happen. How many times do we have to talk about it? Moral hazard. I mean, what is this policy of bailing everybody out going to send? What type of message is this going to send to people? Individuals as well as corporations and to governments. Don't be responsible. Don't save. Don't pay your bills in time, or don't pay them at all. Spend it on whatever you want. Don't worry about the debt. Don't worry about any of your personal debts or deficits. Don't worry about your personal balance sheet. Do what you want. Spend as much as you want. We'll bail you out. That's not a society, folks. That's not a society. That's chaos. That's chaos. You are asking for nothing but problems from that. And that's why I said one of the problems here, one of the things that needs to take place is people need to learn their lesson. Those who have done the right thing and have saved are now having to subsidize everybody who's done the wrong thing. People who said, I'm going to pay off my student debt as opposed to going on vacation, well, how do they feel now? Does anybody care about them? Maybe somebody bought a smaller car because they wanted to pay off their student debt. Or they wanted to save up more so they could put a bigger down payment for their home. Well, what about those people now? Does anybody care about them? Or is it just about those who took on too much debt? Woe is me. It's not how it's supposed to work, because these are supposed to be prime opportunities for people who have done the right thing and saved, to have a healthy balance sheet, whether that's on a corporation, whether that's on your personal balance sheet, to go out there and acquire new assets if you want. Obviously, they're new to you, at a better price, a lower price. That's how an economy rebalances. We are completely distorting the whole picture from A to Z. No politician seems to care. No central banker is going to stop any of this. President doesn't care. Treasury Secretary doesn't care. In fact, they're cheerleading all of this, all of these people. That's all it is. I don't know when you're going to wake up and leave these people, leave these parties. They have abandoned you years ago. It is in your face. I don't know what you need to see. I don't know what you need to hear to finally wake up to this truth. Do you have that much animus or hatred for the other party? Is that the only thing that keeps you in your party if you're a Republican or a Democrat? I mean, silence. What is your answer? When are you going to wake up? These are the people, these are the parties that have been at the helm for generations, and look where it has led us. What makes you think these idiots are going to somehow become geniuses in the depths of one of the largest economic and financial crises we have ever seen, and we're just at the tip of the iceberg, and also dealing with a global health issue? What makes you think these people are equipped to handle this? The answer is they're not. And they're doing the same exact thing that they have done for the past decade, which has led us to such economic and financial and social ruin. And they are doing it at warp speed, with no oversight, with no accountability, no strings attached, unless, of course, you're a small mom and pop shop. Then there's a million strings attached, and you're probably not even going to get the money. But if you're a mega corporation, a large corporation in the right sector with the right buddies in Washington, D.C., don't worry about a thing. Here's trillions of dollars, no strings attached. Have at it. Okay? That's the system you have. And if you think that that's sustainable, good luck. GDP figures will be coming out this week as well. So we'll see what those numbers, of course, estimates are all across the board. Most estimates are, when it comes to worse, is going to be in the second quarter, but we won't get those numbers until at least the end of July on the first reading. And of course, there will be a few revisions after the fact on all of these figures. So we'll keep you posted on what the preliminary number is. Again, the Federal Reserve is going to come out. Most of that is going to be a lot of, it's tough. We're doing what we have to do. We're acting very swiftly, very positively, trying to help the American people. And again, I am expecting the chairman of the Federal Reserve, Jay Powell, to open up his press conference with that like he typically does. The Federal Reserve is here to work for the American people. Again, sir, what American people are you talking about? What Americans are you talking about? Because I don't think it's the Americans that are highlighted in the CBS article that I'm going to read here shortly. Can any of these reporters, can any of them have a spine for 30 seconds to ask a hard question of this guy and to press him to give an answer, to make him look like an idiot in the Federal Reserve as well, and the federal government? Can they do it? Can they ask a very tough question? Because most of these people, because you'll see them on Bloomberg or Yahoo Finance or CNBC or Fox Business, you already hear most of these people talking. These are most of the same reporters that are in Washington, D.C., for this press conference. Of course, this press conference might not be in person because of what's going on. I'm sure it might be digital or whatever you want to call it. But what are the questions going to be? They're all for inflation. They're all for it too. They're all for more of these bailouts. The Federal Reserve's got to print more money. They got to give more trillions and trillions of dollars out because you're going to give it to corporations. Well, you got to give it to small businesses. You're going to give it to small businesses. You got to give it to the states. Going to give it to the states. You got to give it to the individuals. When's it going to end? Who's paying for it? Is there any cost associated with this? Does anybody care? These are basic questions. And I could put some real harsh ones together, but I will save that for another time. So that's the Fed meeting. It'll be a joke, but that's what we've grown accustomed to. But it'll be interesting to see how the markets react to it. Did they price a lot of that in already and have a little bit of a sell-off, buy the rumor, sell the fact? Or does it make no difference? They're just going to continue to rally if they can find any type of excuse. Another thing I want to highlight here real quickly, because this is something also that the president mentioned yesterday that we highlighted a little bit in regards to the trade deficits, and basically the president doing what he does all the time and patting himself on the back, giving himself praise for cutting the deficits and doing XYZ, which is not true. We knew, at least from the standpoint of the tariffs and being broke and not having enough money, not having any money basically, yet still talking about how we're going to continue to bail out the farmers with leftover funds from the tariffs. We know that's a joke. But I wanted to take a quick minute to actually look at some of the numbers when it comes to net exports. And of course, net exports is exports minus imports. And since we import more than we export in this country, that becomes a negative number. Okay? That's been typical here in the United States since really the late 1970s. Before that, we had a, somewhat of a surplus, relatively flat, but it was a surplus nonetheless. Ever since then, late 1970s, it has been deficit after deficit after deficit, and it's gotten worse really since the Clinton administration, the Bush administration, the Obama administration, and now it's continuing under the Trump administration. So here's just a little bit of a fact set for you. Okay, again, this is net exports of goods and services. First quarter of 2017, okay, that's the first quarter, obviously, of Trump's administration. We have negative $570 billion. So we have a trade deficit of $570 billion. All right? The fourth quarter of 2018 was a trade deficit of $684 billion. All right? Wrong direction. Now, fourth quarter of 2019, we have a trade deficit of $578 billion. Okay, well, you can say, okay, well, that's in the right direction. You can also say, well, we're getting closer to where he started. But here's something you have to also understand, folks. At least in the United States over recent history, when we enter an economic slowdown, which we have been in for quite a while, it is now just truly being revealed how weak this system is because of the pinprick that is COVID-19 to the everything bubble. What you will witness, again, in the U.S., recent history with what's been taking place when you have a slowdown in economic activity, is net exports is not as bad. So you start to have this uptrend, getting closer to neutrality, okay? Not anywhere near it. We're still at negative, $600 billion, all right? But it's not as bad as 684 or 700 in the depths of the Obama administration and the Bush administration. It is moving in the right direction, so to speak, but you will see this type of behavior in an economic slowdown, in a recession. Why? Because this economy in the United States, as is in many cases, is consumer-driven. And because we are net importers, meaning we import more than we export, that comes to a halt. It slows down because nobody's buying anything when you're in a recession, an economic slowdown. So that's why you start to see a smaller trade deficit. Well, it appears that we are currently on that trend. Now, we'll have to wait to see what these other quarterly data comes out for the first quarter, second quarter, yada, yada, yada. We will keep you updated on this. We will continue to see if this monitors these recent trends, which I do believe that it will. But if there's some sort of malinvestment, some sort of other rebalancing taking place, it'll be found out here as well. And if there is some sort of anomaly, we'll be sure to conduct analysis and share that with the audience. But I just wanted to highlight that point because the president loves to pat himself on the back, loves to say that we've brought in billions and billions from the Chinese, that they were paying us, which is not true, that we still have that money, which is not true. We're as broke as a joke. That's why we're going to have a $4 trillion deficit this year at a minimum. If you had the money, you wouldn't have the deficit. This is pretty simple to understand. And then to say, well, the trade, everything is getting better and better. No, it's not. It's not. And a lot of this now, the quote-unquote getting better in that right direction, is a direct result of a weaker economy. Okay? Just so you understand it, just for the facts. Now to the CBS article here. Millions of Americans can't afford food and rent, recent report finds. The coronavirus's seismic hit on the U.S. economy is rattling people's finances. Roughly 41% of working-age adults say their families have experienced a job loss, a decrease in work hours, or other employment-related declines in income in recent weeks, according to a new analysis by the Urban Institute. Underscoring the jump in financial distress around the country, more than 4 in 10 of Americans whose work was affected by the pandemic said they were not able to pay the rent, mortgage, or utility bills, skipped medical care, or were at risk of going hungry. More than 4 in 10 of Americans whose work was affected. This is the United States of America, ladies and gentlemen. You understand this was not a booming economy. If you're out of work for a month and a half, a few weeks, obviously, depending on what part of the country you're in, and you're already this far behind, that's a problem. That's not a booming economy. That's one that is living paycheck to paycheck. There is nothing strong or sustainable about that. What don't you understand? So going back to that, yippee-ki-yay, we're going to reopen everything just to go back to this unsustainable system? I don't think that's a good solution. The findings are based on an internet survey of more than 9,000 adults between March 25th and April 10th. The time frame suggests Americans' financial problems are even more widespread now, given the millions of workers have lost their jobs since that time. Other signs the pandemic is having a severe impact, according to the Urban Institute, the following. 31% of survey respondents reported their families cut spending on food. 28% were forced to use savings or take on credit card debt to pay their bills. 69% of those whose family incomes were below the poverty level were unable to pay for their housing, were food insecure, or were unable to seek needed medical care. Do any of those things sound good to you? No, because they're not. And this, of course, goes to our point that we have been highlighting here for quite a while, which now the mainstream media is finally sort of catching up on, and that is the food shortage. The food shortage. And I do believe the president is trying to use the Defense Production Act or some sort of executive order to keep some of these food processing plants, especially these meat packing plants, in operation. I don't know how that's going to fly, because the reason these plants have shut down is because a significant portion, or at least a sizable portion, of the employees there have been found to be sick with COVID-19. So you can sign it. I don't know how you're going to enforce it, but I guess we'll see. The cratering economy, which has left an estimated 1 in 6 U.S. workers without a job, is especially hurting younger Americans, minorities, and those without a college degree. Twice as many Black and Hispanic Americans as whites say they are no longer earning any income, according to new data from the National Opinion Research Center at the University of Chicago, a nonpartisan research group. Meanwhile, the federal government's $2.2 trillion package of economic relief measures is only going so far as Americans try to cope with an economic calamity that by many measures exceeds the Great Recession that followed the 2007 and 2008 financial crisis. Among households whose incomes have fallen during this year's downturn, more than 40% are using savings or are behind on their bills. And for many, staying afloat has required taking on debt. 28% tapped their credit cards, borrowed from family or friends, or took out a short-term loan to make ends meet. Okay? And lastly, we have here from one of the senior research associates at the Urban Institute, Michael Cartman. He states the following: if families are unable to stay in their homes, can't afford food, or have to skip needed medical care, this crisis will worsen the already enormous problem of inequality in America, he said, which he's absolutely right about this, because it's the investors, it's the stockholders, it's the bondholders, which is primarily concentrated in the top echelons of the income bracket, who are being backstopped, who are being bailed out through these actions. You invest in a stock, you buy a bond, you incur some risk. If it goes your way, you get to reap the benefits of taking that risk. If it goes the opposite direction, too bad, you lose. That's part of the game. You don't get to change the rules of the game as it's playing out because you started to lose. That's not how it works. But that's exactly what's taking place in this country and globally. And who seems to care? Nobody. The president's for it. His economic advisors are for it. The Treasury Secretary's for it. Wall Street, of course, absolutely loves it. CEOs, corporations that are close to Washington, D.C. and are getting the trillions absolutely love it. The Federal Reserve seems to love it because they're doing it. Politicians seem to love it. But not 4 in 10 Americans, and that number's only going to get worse. Not the 26.5 million Americans who are out of work. Protests, global protests. We've been saying here for months, not transitory, history in the making. That last quote from that research associate hits it on the head. This is sowing the seeds of discourse here. Civil unrest, it might even be violent. It might even become violent. I hope it doesn't. But there is going to be protests here in this country, coming to a theater near you. Because people will start to wake up. Once food prices go up, and a whole host of other things, not just the cost of your iPhone and other luxury items that are a privilege and go out there, things that you need to live. When those costs start going up, and people start connecting the dots of who really got all this money, that it wasn't accounted for, that there's no strings attached, versus what you ended up with, and the higher costs that are associated with it because there is no free lunch and free was never so expensive. It's going to come to a rude awakening for a lot of people. And if they have nothing to lose, they might just lose it. More. That's what the Fed's going to give us. That's what the federal government's going to give us. They're all broke, but who cares? Please like, share, subscribe, get the word out, leave your comments. We do love hearing from you. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Kreitis. Godspeed.